Mic check. Can you guys hear me?
I can hear you, Gish.
Cool. In relation to the other calls, does this sound any different? Is the audio like everything's okay?
Sounds a little muffled. Good after
Yeah.
morning.
Thought it would. I haven't used this PC in a while, but it has something I need, so loaded it today to check on that and decided that why not give this a shot? Hence, we're here today. Nonetheless, bam, bam, bam. Looking for something. Here we go. Okay. I have a chart. I just don't know where it is. One of the NAS daily I usually share just before we dive into this. Anyway, we'll just go straight to the daily chart here, and then we can look at a couple of things. First things first is this just died. While I expected the draw on liquidity to be an FEG that was inside here, which is why I was saying maybe Thursday or Friday, I don't remember, that we want to pay attention to that. I was watching this FEG as the most probable area that sell side around would take us to. But I did not expect it to be, well, I don't even know what to say. I expected it to be this week, but the lack of news had me thinking that maybe we wouldn't get it. So I might need to reevaluate my stance on no news days, in particularly sell-offs on no news days. At this moment, I believe strongly that we need to get back above that high. I don't know if getting back above this will mean bullishness, but I don't think this high should be left untapped. So I'm looking for, some type of run there. I'll probably not trade it, to be honest, because I don't feel comfortable about where we are. On one hand, I feel like the closest near-term sell-side objective has been met. And on another hand, I feel like we should take at least 3 weeks to get down here. And this is like week 2. So conflicted is the word. But for right now, I'm looking at maybe this and then that. I just don't have the conviction to trust it yet. But instincts say this is what I should be looking for. So nonetheless, I believe the drawn liquidity is here. I don't have any major talking points for today. I literally was just on my way back home, and I just felt like somebody was trying to reach me. I checked my DMs and I saw a couple of messages from persons, and I don't know. I feel like either yesterday I did a number on a couple of guys, or something. I don't know. Not sure. But anyway, I decided to do the call today. I dropped everything. So why not do a call? So let's get into the analysis. Please don't be quiet, audience. Bring your questions. Don't be shy. Don't suffer in silence. So I'm going to go to the lower time frames, H1 first, and I'm going to primarily be looking at things in line with a run back to here. Okay. So here we go. Take the indicator off for a second. So H1, this was yesterday's delivery. If anything here would lend to the idea that this is buy side liquidity, then I'd pay attention to this expansion right here. It's a big push away, right? And then that would have me thinking, since that's the push away in the expansion, first FEG right there. So my key level automatically becomes there. There. All right, so create my key level. Bam. I will put blue line to denote this and black line to denote the law of the order block here. They might not be important, but let's put them here from a process standpoint rather than just trying to trade. Now I have my upside target. Is there any reason for this market to trade lower before going higher? Okay, let's take a look at what we're doing today. Opened up, went lower, then it pumped, then it dropped. FVG here would be the first thing I'm looking at. So if this was going to retrace in the morning before going higher, I'd have my attention fixed on that FVG right there. Nice and simple. No moving parts, just that. So at 8 o'clock, I'll be looking for here. We already got there sometime after 7 based on this candle. So now jumping into the M5, I have my key levels, I have my drawn liquidity. I'd just be trying to get in on the move now. Now I can blend confluence from submission range. The FVG that we're looking at sat right on top of the submission range. The market came back down, rejected the high. I'm probably not going to get an entry. And this is going to go to the drawn liquidity. So, first thing I want you to notice, I did my normal analysis process. Identified where I wanted to see the market trade to, identified my bias, so to speak, order flow, key levels, then supporting confluence. Because this has already rejected here, there's a high possibility I'm not going to get a retracement entry to get into the level I want. So going into trading today, I don't think I'm going to be a part of the first push or the morning delivery. I haven't stocked an entry yet. I haven't looked for any setups. I haven't looked for like an entry fractal that I know. I'm simply framing an environment in which to participate. That's what we do. Everybody knows entry patterns. Everybody knows how to find your drawn liquidity. But is this environment one where you're likely to be successful? I think that's what we don't pay attention to first. And that's why some things happen out of the blue and they surprise us. I ignore things sometimes, if I'm being honest. Sometimes they're painfully obvious stuff and I ignore them because I'm fresh out of bed with a little bit of excitement. Okay? It happens. No big deal. I'm not going to crucify myself for that. I'm simply going to recognize those instances and stick to it. So, scenario 1. This moves to the drawn liquidity higher without me. What am I going to trade? At that point in time, I'm going to look for is this really bullish when it gets to that previous day's high right there? Is it really showing signs that it wants to keep going or not? This is pretty far. So depending on the volatility drivers today, we might just keep going higher, consolidate here, and then today fails to get there. And then tomorrow's what? Thursday. We have a Thursday high of the week situation where Thursday, maybe Asian session, runs this. Then it just keeps dying nonstop and then make a new daily low. I don't know. But as of right now, if this does not retrace from that H1 BPR or breakaway gap 50%, it's probably going to run without me. Now, what if I want to trade still? It's not retracing and I want to trade. How am I going to find some type of continuation play? Simple. If this is the key level and they show willingness to get above and close above here, identify some support narrative here. Something. Do we have order blocks? Do we have a run on sell side here followed by an expansion? Do we have a big push through that level that creates a FEG? Those are the instances or the situations that would get me participating in the long to that, because I still believe that that's drawn liquidity. So looking at this now, I'm not thinking maybe since 8 o'clock didn't get here, this could do a second sweep and get down here and then I participate. I'm not thinking that, because thinking like that is going to do two things. One, it's going to get me automatically thinking or putting too much importance on this price action. And two, if I should get a trade, chances are I'm not going to be as disciplined as I'd like to be and take 20, 30, 40 points here. I'm going to start looking at, okay, high time frame is bearish. We rejected a breakaway gap. Automatically, new daily lows. No, I'm not going to think that, because then I'd be saying retracements don't want the daily FEG right there. And that's imposing my will because I want to trade. So automatically going into today, patience is going to be a big factor. I'm probably going to miss some good scalps. I'm probably going to not get any trades and stay on my charts a little bit later than usual. So for you, it's a decision you'll have to make. Participate or come back later. So yeah, if you approach every day like that, clear key levels, clear drawn liquidity, what's the price action like at these liquidity draws, then it becomes easier to frame an environment where you're likely to do well. If this here does not close above that red line, we're probably not going to get that today. So if you're caught between what to do here and you don't want to stay around here, just set an alert. Set an alert, your phone on load, go do something else. If you never get that trigger, you never come back to the chart. Or let's say you still think we're going to run here again, because it's possible. If it runs here, just set an alert there. So you have two alerts, one here, one there. So you know the next time you get that chime sound, that's when you participate. But as of right now, this means nothing. And it could be that we don't get anything until equity is open, when that next surge of volatility comes in. So let me see if I can put M5, M1. Put M5 on the right, on the left, M1 on the right. So now we can entertain looking at charts without being forced to accept whatever pops up here. Look at it. Nice scalp. It makes sense. Did it move from a level or something I understood? Yes. Beautiful. Do I want to trade it? No. Peace of mind. Peace of mind watching this. For the persons who like mile markers, this down candle becomes your first candidate for a mile marker. What does that mean? This red line is our line in the sand. Above and closing above, like getting above here and closing above here, means higher prices. It does not mean buy when we close above here. It means higher prices. You'll still need to frame Do I need to wait for a sell side run first before taking an entry? Or can I buy below the open of the next candle? If this 835 is in fact going to be the start or the initiation of this push higher, I need to see a couple things. Well, three things in particular that will give me conviction. Close above the high, failing to get back below 50%, sweeping that low. Those three things, regardless of the order, gives me conviction that this is going higher. Right now, we're just loading the cannon and waiting to shoot. It's not yet there yet, in my opinion, in my humble opinion. So, bam, bam, bam. As of right now, I like the idea of this low getting run. So from a key level standpoint, let's start framing the delivery. Some sell side run should take place either at or very close to that level. At or very close, so I don't impose too much on myself. At or below that level, a sell side run needs to be taken or need to be done. So right now, I got the sell side run. So of the three things I need to trust to be a buyer in this market, one is done. Next one, closing above 50% of this body. So I can now frame where I want to be aggressive based on if we get a close above this body or not. If I'm going to be thinking purely about entry fractals, I know my entry is not going to come until this candle closes. And this is 845. At 845, I get interested in seeing an entry fractal. Either it's going to be a big push above here, or it's going to be a candle that closes inside this body or this range. I don't know. And it doesn't matter. I just know that until that time, no entry that fits my rules will form. So, while we watch the M1, the only thing I'm thinking about is let me see how the M1 prints in line with this expectation. Is there something on the M1 that I recognize that I can start anticipating? Yes. Two big down close candles, FVG in the expansion leg, failed expansion. So while there is no entry fractal now, I could start saying to myself, okay, this looks like something I recognize. If this happens, it's telling me or suggesting that what I want over here is coming. It does not mean this is going to hold all the importance for that. It does not. Fail expansion, up candle. If this closes a down candle, buying below this candle's open price is textbook CSD because this is now your key level. If this is your key level, it's your order block candidate as well, because at your key level, you have a down candle following a failed expansion. That right there is an entire trading model. Failed expansion, we close inside. If this is a down candle and it trades above that, buy below the open of the next candle. Simple. It's 8:45 now, yes? So now I make allowance for an early entry. I don't go into the chart, buying below that. I now make allowance for early entry. What does that mean? If the M1 prints something that I consider an entry fractal, before this M5 closes, I will execute on it. See? Process. Nothing has printed yet. I don't know if the candles are bullish or bearish, but I already have a system I'm going to follow if I get confirmation. I'm not stalking a bias here. I'm not stalking a key level here. I'm simply stalking confirmation of my expectation. Key level, we go above it? No, we haven't. Is it inside the window of time I'm allowing for my entry? Yes. This is not a trade to take. Well, clearly there's nothing here to buy. But I want you to see again, we don't stalk bias on M1 at all, ever. It should be worth noting as well. M5 closed below the level here, the area I wanted for sell side liquidity. So as far as an expansion lower is concerned, mile marker. What does that mean? It means on the M5, while I am expecting higher prices, I want to see the M5 stop expanding lower. Something inside there. Nothing to buy yet. Nothing to do. Nothing here makes me feel like, oh, I should have went short. Oh, I should have done that. Nope. There were too many things here that says some delivery is going to start right there. It could be bullish, it could be bearish. If I came into the day with an underlying bearish bias because we dropped hard yesterday and it's retracing, breakaway gap, looking for shorts there. Simple. But I can't short there and trust that all that buy side above us is not going to go. So trades like this, they miss me, but I watch them. I journal them. And I'm not journaling them for entry purposes. I'm journaling at the key level. This is what printed. This is how we moved away from it. This is a trade that made sense. There are million, like, look how many things are inside here. So many things. Buy side, sell side, retrace, expand. Down candle before the run on buy side, breaker. So many things inside there that we all can recognize. So it's not a big deal to think about, I could have sold this, I could have sold that. It's just going to have you chasing entries. This is retracing. It's 848. If there was anything on the downside that I was going to look for a retracement to before higher, would be the open price of 720 because it's after 8 o'clock. And I'm adding that just so you understand. While this is going down, I'm not thinking, like, I'm not changing my mind or anything, or I'm confused about what's going on. No, I'm still stalking a setup. The criteria for my setup hasn't printed. There we go. 720 open. While we're below here, I'm going to assume or interpret it as we're in a discount portion of the market. If this M5 closes below here again, fail expansion logic says that's the low you mark. It is. M5 closes. Fail expansion is right there. Fail expansion meaning if we don't close below that on M5, then that's my fail expansion.
$8.10 needed pants
810.
on M5.
I have no idea where 810 is. Oh, this one. I see it.
Come on. You don't see those naked guys?
I see it now. I see it now. But I didn't want to point to things like that.
I
know,
know. I'm just playing.
I want to share the process. That's what a lot of persons in my DM this morning were talking about. Having their entry fractal, just not having conviction when to not. That makes sense. So here we are here. Nothing in this is strange. If it actually gets down here, nothing about that is strange. Be cool and calm watching it. So again, as you watch this, it's 8:51. This candle at 8:50 will close at 8:55. If we close above here, then the open price right here is your key level. If it closes above that, if it doesn't close, no big deal. Undelivered. Voodoo, that was a nice Monday push, Voodoo.
I know nothing.
Hey, Kish, good morning.
Hey, what's up, man?
Not much. I do have a question. I guess like more like foundational as far as like a principle.
Sure.
But so like one of the things you tell us to look for like at our key levels or like with any of the areas of interest is like the OB model or rejection block model.
Mhm.
When the OB model happens, like perfect, good order block created, expansion can go like straight from that order block. But when it's a rejection block, and like say a rejection block takes our pool of liquidity, before we can really move away from that, we still need to print an order block inside of either the key level that's sitting there or within the rejection block before an expansion. Because technically, like the order block has to precede the expansion, correct?
Right.
Okay, just double checking there because at times I'll see the rejection block play, like even at the highs there, that short, the first high was taken with a rejection block on M1. And then like, if you don't mind, just zoom to the left a little bit on M1 if you're not busy.
Right here?
Yeah, just a little bit more because like I was looking at like some previous highs that we had taken.
Mhm.
Oh, I mean like over here on M1. Yeah. Okay. So like there was like a range that I was framing, like here. It got taken with the rejection block there. I had this key level to print the order block there, and then when I drag that out in time, that's where they print the order block. Then they start to bag away from it. So I guess like what I'm getting at is when I see key levels of interest taken with rejection blocks, waiting to see that OB printed there is like a critical step in that. Is that correct?
Correct.
Okay. All right.
Well,
Thank you.
So let's look at the confluence of things, gentle. Or not, it's David. David.
Yeah.
This red line is 50% of the H1 FEG, right? We know that.
Yep.
So if we have certain cycles hitting that and then closing, think about it like purge and revert.
Yeah.
Okay?
Yeah.
So if one cycle hits it, narrative for speed lower comes from taking the low of that cycle.
And that's just a trade through for you or a close?
Close.
Yeah.
The only time you allow trade through if it's intraday. So
Okay.
if the day starts, so let's say this price level represents the open price of the day. Okay. And we have some pool of buy side resting right there. If we get a delivery that looks like this, I don't need a close through this. Or sorry, let me not say it like that. If we get a run on buy side like this, I become bearish when this low is gone. If this is happening
Sorry.
before the end of the day, I don't need a close. If the day closes and we're like that, then the next day,
Yep.
but as long as this is happening inside the current day, I don't need a close. I don't need this day to close. I just need them to get down there, identify retracement objectives, then we're good.
Perfect.
Cool.
That's clear. And then I was like, I had the call on, but I was in the other room dealing with something. And are you still looking for yesterday's high to be taken, or like are you in these shorts holding them?
I'm looking for yesterday's highs to get taken.
Okay.
So remember from the left, okay? On M5, this is where we would want to buy. It got tapped before 8 o'clock. Okay? It
Okay.
traded down. Maybe, just maybe, it has to get taken after 8 o'clock. But let's not entertain that idea and then for a second. This is where you want to buy. Right now, as of this point in time, this is where on the M1 we're going to be looking for something. But just to keep everybody in line, fail expansion, new M5, we're now looking for this M5 candle close above here to show fail expansion, and then it's going to run. When it starts to run, we're going to be focused on this candle's high. When it gets to that candle's high, we're going to allow for retracements, and then we're going to expect them to go make a new high. So going into...
And in the context of this failed expansion here, Kish, in the context of this failed expansion, does a close here versus a wick here deter you from adding on?
Doesn't matter. If I'm going to add on anything here, we must trade to here and then retrace. If it wants to close above before the retracement, I don't care. If it wants to wick it and then retrace, doesn't matter.
And this is like one of the things I've been studying. So like, say this does, like, just for example, say we do fail to expand here. The process that like, once that takes place, the process that you're running through your head is you want to see the order block created, like traded to the key level, order block created, then we should bag over here, correct? And those are the order of operations that you're following while you're like scaling in.
Okay. No.
Okay.
It's important that I say no here.
Okay.
Because saying yes is going to have you making a very critical mistake.
Okay.
Okay. Here's why I said no. Because I know you're like, what is he talking about? If we print in that manner, take the buy side, fail expansion, get here, retrace, push, and bag, that is an example of how we can leave here. It is not the requirement for leaving here. We could print no inefficiencies inside this. It could be a messy delivery. So right now there was a FEG, no FEG. They could do that and make no FEGs in that push up, which means we don't need to retrace deep. It could do that, and then what? It's 9 o'clock. Somewhere around 9:04, okay? Somewhere around 9:04, we could print. What is this? What is this? If you want to send me notifications, there we go. Somewhere around 9:04, we could get a big candle. that does not matter unless we can see the delivery here. So like I was saying, what if they don't leave any FEGs here before they take that high? PS, for the persons who are confident enough, that was your entry, right? Never
Yeah.
done.
Yeah.
What if they don't leave any FEGs here? Because I'm not expecting them to leave any FEGs here. So you can watch, let's just watch the delivery. I don't want to see them leave FEGs here. What I want to see is them get above this. Demanding that an FEG gets print so that you could play it as a bag is just one scenario that can print here, and it's not the only thing that can print. No, that's not it. That is not it. Okay.
Okay.
This
Excellent.
right here is what we want. Like you should feel so comfortable watching this, because what's happening here and what's happening here is the same thing. This is your failed expansion right there. Your key level. This is the candle that you want to see them take before retracing. So remember when you asked, do I want to see a close above here or a wick?
Yeah.
It happened at this high. They wicked it. Did they retrace? No. It pushed higher. Because we know that once, no. Ignore that for a second. Ignore that. Focus on this candle.
Okay.
When they take this, order of operations must come in. It's not take this and I buy. It's take this, retrace, and I buy. So right here, I'd be thinking I would love to buy below the open of this candle if it comes back below here.
And this is just OB validation within the failed expansion.
Yeah. That's exactly what it is.
So, but okay, I guess like where you're losing me a little bit there then is, wouldn't this be the OB, like I kind of said, and then once we validate that OB, retrace to the OB, aren't you expecting speed here?
I'm expecting them to leave here. Leave here means staying above this order block.
Okay.
But remember, this is a fractal of this. Which one dictates speed? This one. That's what I'm saying. This is what we want. What we're doing is watching how it prints on this time frame. This is the learning part. The learning part, sorry, this is the application part, where you apply what you want to see because you know what it looks like. This is where you want to say, because these processes are taking place, when this happens, M1 is going to print maybe something like this that I understand. Don't demand that it has to print in one specific manner. Instead, say, this is the process, and these are examples of how it prints. Okay?
And yep, I'm with you. And in this example, though, with how this printed, reading left to right, our key level was there, correct?
You're asking or you're telling me?
I'm telling you because, and the reason I'm, I guess, probing a conversation into this is, what's the difference between this level and this level?
M5 fail expansion.
But is this also a key level, I guess, like, is what I'm getting at?
Why?
Because it's showing us where the expansion on M5 ended.
Okay, so let's look at this for a second. This is where the M5 expansion failed on M5. Okay, so now we're expecting a bullish delivery. Okay, we're expecting a bullish delivery. Most bullish deliveries start with ... What's that?
Most bullish deliveries start with taking sell side liquidity and then looking for OB or projection model.
Beautiful. So if when this prints and we close on the M5, I'm expecting a bullish delivery.
So we need to run sell side.
We need to run sell side. So on the M1, we already know what we want on the M5. We want a fail expansion on the M5, so a wick on the M5, but bodies inside here. What do I want on the M1?
Sell side run. OB
Sell side run, then anything that's bullish. It could be a fail expansion, which it was in this case. It could be a rejection block. What if none of all the M1 just wicked here and did not close? Then we have a rejection block. If it closes, then you have an order block. So that gives you context for what you want to do. You already know what you want to see, but what you want to participate in is going to be based on how the M1 prints.
And so, okay, so if I can just walk us through this then. So at this point in time, we're stalking because we've now like understood.
No. You don't determine if you're stalking until the M5 closes here.
Okay, that's kind of what I meant. As far as like once the failed expansion takes place here, then I can say, well, if we're going to start a retracement or a reversal here, then M1 is going to print me a bullish delivery, and the step one of a bullish delivery is running the sell side, which would be housed here.
Correct.
Okay, and then if we take it a step further, we close here. So this is our first attempt at running sell side. We take the sell side. I'm doing nothing here. Fail to close past it. I know that that's a key level, but you're watching here because this is where the OB gets validated when that high gets taken. So once that high gets taken, I'm saying to myself, I have a key level here. I have 50% of the order block here. I can buy a retracement here. And then, so once I know that this OB is validated, and I know that like my bullish delivery has started, or at least like the signatures of it have started. I'm looking at OB 50%. Then once I'm in this initial entry, I want this. That's my next step is like, I need to see them come to M5 and show me that the M5 is taking highs now.
Correct.
Then once that happens, what's your next step there? Is it looking for another retrace to inefficiencies like we got here into the key level? Or is it waiting for the bag over here?
Nice question. Nice question. So if we know that once this is taken, higher prices are coming, what would suggest a need for lower prices or retracements after this high is taken?
A wick.
Not just a wick, but any retracement and any key levels inside here, because remember, one order of operations say take this, retrace, hook, and then go. If they take this, where would you reasonably expect a retracement to come back to? And you mark that as your key level.
Yeah.
But then you validate it through this. The order of operations or the order of delivery is important. Inside here is where the intricacies of the retracement is going to form. Do we have FEGs? Do we have order blocks? Do we have, I don't know, something for them to retrace to? That's what this is going to tell you. This is going to tell you where or how, and this is the narrative for it happening. That's why I'm saying you have to keep this candles high on your chart. Because this is going to tell you, should I take the risk? Should I accept it? Something. Like, all right, look at this. Look at this right now. Look at this right now. Chances are most persons would be long here and not know, man, what is happening here? Do I cut this? Maybe, what if something happens that equity is open and this dives lower again? Everybody's going to be, not everybody, but you know what I mean.
The micromanaging takes over.
Yeah, persons are going to be like, should I sell the retracement after that wick down? All of that. These fractals are the same thing printing over and over again. Failed expansion, run on sell side. This needs to go. This is a clear. What's that word?
Process.
I don't want to use manipulation. Manipulation is not the word. Change in the order of delivery.
Okay.
Why? Let me draw something.
Are you saying that this is Zoom taking place?
Wait. This, everybody knows what this fractal means, right?
Yep.
Head and
If we
shoulders.
take this fractal and we try to impose it on M5 or M1, are any of these steps missing? Or are we getting them in the same order? We just got the drop down here, right? There's that push. What I want you to see is this. Let me move this line. Maybe this will help. Look again at the drawing here. Look at the order of operation. That's what I'm saying. It's the order of operation here that tells you that this is not, it's not ready to move. If this push down represents this portion here,
No buys as yet.
this is the run from here to here.
That's this leg here on M1, right?
Yeah, M1. But remember, we're taking all the narrative from M5. We'll get to M1 in a second.
Yep.
This is not this. It should be, but it's not. We had this drop before here. So the order of operations changed. So essentially what happened is we dropped, then we drop again, and then we put this part right there. Unless this happens, you don't have a trade. And this leg is going above this high. So looking at this, we know this high is on the menu. This is what sets the direction. But isn't this relatively equal to this? I can check the number. It's 22.4, well, 24.6. And this is 24.4. 2 points off the high. So now we have something that looks more along the lines of this. We still need that part. Both of them are the same thing, but this one is like it's been stretched out a bit. So all of this part, that should be here. The order has changed. If this high does not get taken, I don't buy. I don't look for, I don't expect anything else. That's what I said when I came into the market and we saw all this pushing up. While I want higher prices, I can't buy this. You can't buy that. Well, you can, but buying that does not demonstrate any type of rule or process. None at all. So you have to look at, these are the things that show you the direction of the market. If you don't get confirmation of direction, we're scalping. Scalping environment, that's all it is.
Hey, can you?
Hey, Kish,
Sorry, go ahead. Whoever's got a question, go ahead.
just real quick. This is very similar, this fractal right here, to the model you shared in the group a while back, correct? In the paid VIP?
Potentially. Not all info is fresh in my mind right now.
Yeah,
But
okay.
just watching this, as somebody who wants to buy, this is just, there's so much conviction I get from seeing a key level with lows get ran when I want to be a buyer. Because once we start getting what we need to confirm direction, it says there's no need to retrace. Where, most people are going to fail is when they see this and they just want to trust something and enter. Just want to enter, just enter. I didn't know this was going to drop this deep. I didn't. It's impossible to know that. But I know what the levels are. I know that if I did not get to the call until 8 o'clock, automatically that's my key level. It traded to it before it. I'm looking at the delivery. Okay, what constitutes higher prices here since this is hitting 50% of an H1 breakaway gap? Down candles there should not have highs untapped. Support narrative, when you have down candles, the highs get taken. So if I want this key level to act as support, push me higher, The down candle size have to go. But, you know, candles print, how candles print. So now I can start anticipating. If I see a down candle here and it gets above it, and I buy, what would prevent me from holding that buy? If the 50% of the body is not holding price up, if the low is on top, they could wick it and then move, especially since we haven't gotten equities open as yet. All that is fair play. But because we don't know what equities open is going to do, we read left to right. This is how we build our narrative. These are our levels. No close, no close, big push. Big push through failed expansion. This, when we take this or 50% of this, it should look like this. So at that level, or at 50% of that level, I can demand what I want the candles to look like. And if they print in line with that, conviction. Absolute conviction. But we don't get confirmation to, well, not confirmation. We don't get what we want for this high to get taken yet. It's not equities open. We hit a key level. Zero reason to jump the gun. And I don't know if it's luck or experience, but I felt like trading this morning was not going to be easy. And I guess that's why I got inclination to do a call instead.
So I guess like with the last kind of rant like you just went on, my problem is, and maybe other people share this mistake at times, is I'm looking there on M1. And by doing that and seeing us close above there, I'm not on narrative side yet, because the narrative coming from M5 has to be there. Is that correct?
Correct. But my question for you, David, is you shouldn't be looking at that.
Well, I was looking here.
The first thing you should be looking at was here. This
Yeah.
was the first thing you should be looking at.
Yeah.
And then if that push and we don't get that high, you should be watching that low, which is why this push below here is beautiful. It's
Well,
it's like a midweek reversal.
okay, interesting.
Capiche?
Capiche.
So now it is 9:18. I want an explosive 9:25. Very, very explosive 9:25. Because we have a big push through the level. All of this, even watching this right now, this is not making me bearish. All this right here is just saying run on sell side. To me, run on sell side. So now I'm saying in my mind, I'm saying I want to see this close, then I want to see the next one confirm the 9:25 is explosive. So unless I feel inclined to just take a risk, my trade entry is not going to come until 9:25. And I keep putting these lines on to show you how easy it is to be patient and not jump the gun. Because a lot of times we all do this. We look at the chart, it's not A plus, but then the candles start wiggling around and like, oh my God, I have to take this. I just have to take this because it doesn't fit any of my rules, but the candles are just so seductive. That's what we tell ourselves.
Yeah, but to me, that's also because there's not a clear like order of delivery. Like to me, like, yes, I agree with you at times. It's like we'll just get pulled in like via candlesticks. But at the same time, even on something like this up here, the failure comes from the breakdown of if this, then that in the proper order of delivery. Like that to me is where the breakdown is.
Okay, no problem. But ICT try to stress this a lot. And I'm not trying to be an ICT clone. But time truly comes before price.
Yeah.
Price is just going to confirm my expectation of the overall draw. Meaning, I want to see it above this high. I want to see it above this high. Outside of that, it's what time should I see that get run? And that's why when we look at things like this, it's really a question of, do we want to take risk? That's all. Let's see what happens at 925. $20 right now.
And like, just to be clear, we're doing the same thing here.
Wait, go again. Go again.
Like,
did you-
just to be clear, we're doing the same exact thing here. Watching that M5 failure to expand, then like marking that over to M1 to find our sell side run. Then once that sell side happens, looking for your rejection block or order block, then looking for the delivery after that. And we're looking to trade there, then retrace, then see the delivery for higher.
Indeed.
So,
Indeed.
and before this, unless it's a clear OB or like barricade here, this is all risk acceptance.
That's exactly what I was saying.
But then once this is here, you're using that as a confirmation.
Yeah.
And then it's like, okay, scale heavy when we pull here.
It depends on where here is, because right now, I'll tell you what my exact thought process is. 925 is an explosive M5 candle. Equities open, retraces, then it's gone. If I don't get 925 being explosive at 9:32 a.m., I get interested in buying below the M1 candle. So
Yep.
I don't know where M5 925 is going to be in terms of price. I don't know where 932 is going to be in terms of price, but I don't need to know. I don't need to study what every candle does. I just need to study what happens with time. So right now, I know what I want to be a buyer. Everybody knows what you want to be a buyer. But there are elements, equities open is coming up. We haven't closed above here. We haven't taken that. Those things are saying, if you insist on entering now, you have to manage yourself differently. Whether that's going to be 20 point scalp, 10 point scalp, 10-point break even, and take some BEs instead of losses. You have to manage yourself like that so that when you see these things, you say to yourself, man, I remember when I used to hold these and not do anything and pray it turns around. Now I see them and I know it's not ideal and I leave it alone. That's
Well said.
where mind comes in.
Yep.
But 925 is here. Well, no, it's 924. I'm expecting explosive price action to come in now. Find it so interesting that these are sitting right at FEG. It's automatically saying to me that M1 above here and retrace there could be a buy. Could be a buy. It's the Sundays. No. I'm gonna have to get spazzing. Shotgun Saturdays are usually a whole lot of spaz. We have explosive price action just 1 minute before. I don't know why. Doesn't matter. I'm expecting it to be explosive. Big M5 candle. I want to see a big M5 candle here. Close above this little box here. Retrace. That should be beautiful. What is the significance of? It's not the significance of 925. It's while reading this and the inability to print the confirmations you need, we know it's not going to be this candle. It should be the next one. What should the next one do? Based on what the structure is, again, here, when this closes, open up, this is your key level, but you can't trade at the key level. So you have to wait for the next one, which is why this is what I'm saying is important. Explosive M5 to get above the key level so we can start buying retracements afterwards. So automatically, just watching this, I'm looking for them to go. I want to see close above here. If it closes above this, early entries are going to print.
So you don't even consider there to be an early entry there already?
No. This is like,
And that's
remember, these are
specifically
just
because you
accepting
haven't
risk.
gotten to your key level,
These are
right,
accepting risk.
Kush?
This is how you catch a falling knife. It's showing you
Because we haven't had the M5 key level hit.
Yeah. So I look at it like this. If nothing else makes sense, look at it like this. What if today is a bearish day? We traded into the key level here. This makes sense. Everybody should be in agreement that, hey, this, I can see why it sold off from that specific price. That makes sense. Which means from higher prices, the key levels we want are painfully obvious. The key levels we want here are going to tell us direction. So if we can't get direction to be higher, then the direction is not higher. That's why these are not about being a skilled trader. These are about being comfortable with risk and money management. Saying, usually when I get my key level hit, I'd go full risk or full lot size or something, whatever. What do I do in these instances if I see fractals that I can recognize? Half risk, quarter risk, something, definitely not same risk. So if it prints, I don't think, oh my God, I'm such a great trader. I bought at the low of the day and then it kept. No, that's not it. That it shouldn't be it. Bam, bam. Two minutes for the M5 to close. Let's see if we can get it back above this down candle's open price or that candle's open price. So let's tag that and label it stay above. So if we're going, if I was going to support any idea of being aggressive here, it would come from this. This is where I'd encourage any type of aggressive behavior.
This is just consolidating inside the barricade. So it's like once like the barricade is there and we're just consolidating in it, it's showing you that we're failing to expand lower. So then CSD should take us higher.
Well, if you're trying to be purely technical, yes, but in reality, it's like 30 seconds before exit is open. So think about direction first, not the entry. What do I want to see here to tell me that we're going higher? Stay above that. Is it staying above that? Nope. There is no entry. What if exit is open, screams higher? Is it confirming what I want for higher prices? That's it. Get above here, stay above, participate. Anything else? This is just a nice price action walkthrough.
Like the CSD there was nothing. We needed to stay above with bodies, correct?
Yeah. Stay up. All right, okay. When I mention stay above something, I mean close above it. Wicks don't stay above. Wicks go and come back.
Now we have pants.
Voodoo the tailor. all of these lower highs here, I'm going to target them. Get my phone close to me now.
The time has come.
Instincts, purely instincts, are saying I can buy below the open of the next candle. My gut is, well, not my gut, my discipline is saying, chill. Chill, man, chill. But as far as rules go, this is when I should be, we should be allowed to trade higher now. This is where we want to participate. You're thinking about buying all the way up here. It's a lot of risk, so be careful. As it's trading down, the risk gets less. $20 seconds. 19. This is pretty close to the low. It's within 20 points. Let me just frame that out for. About 20 points, I think. But that's 13, my bad. They're around there. All right. Now I feel comfortable buying. Next up for me, back above this.
This sounds like everyone's managing their trades.
Naturally.
Anytime now.
Anytime, all right? Full 10-point drawdown. Full 10-point drawdown.
Whatever. Okay, I'll wait.
And Kit, you're drawing direction here just because we hit your key level. Is that correct? Because like nothing else here has said direction.
What do you mean? I don't think you should be saying that. This is quite possibly the law of the day. No, lies. We had a lower low in Asia. Sorry. This is quite possibly the law of the morning. We just need confirmation now. At this point, it's a hunch. Confirmation is here. You could do it, Naz. You could do it.
You had your EQ of submission range, David.
Yeah, that's what I'm saying. David shouldn't be saying.
No, I see it, but I mean, the whole discussion this morning was finding direction. Like we can always like assume that when we trade to a key level, you can just trust direction the other way. But when we hit the key level, it almost seems like there's less emphasis on breaking down direction than there is like here, for instance. Like this is just hit a key level, like buy below the open of the second candle, but the direction wasn't as thorough as above.
All right, let me ask you a question. Why did I not walk through how to be a bear here? Why did I focus on showing you what makes this bullish?
Because you want to be bullish for the day?
But okay, why did I not switch bias, right? Why did I not switch bias and say, guys, we hit the H1 bag, like, let me show you what I mean. Why didn't I say H1 is we're bearish on the H1, we hit the 50%, let's go short and target something. Why did I insist on saying, guys, this is bullish, but these are the things that we want. Stay flat, stay flat. Watch this time, watch this time. If this is going to retrace, by the way, if this is going to retrace, it's going to do it now. Okay. So cover. If you don't cover, you go break even.
$60 points is good.
20
This
points.
damn wick, the wick, the low got me right there.
20 points, 20 points. I was saying 20 points for that reason. For the RR folks, that's 3R right there. This is where it should retrace by then. See? This is where it should retrace. Can't make this up. Unless you're a guru. Don't have a guru. I'm kidding, I'm sorry.
Easy.
Then I end up back.
How much for a guru? How much?
But we're
Hey,
we
and
want
Kish, that was just our IOFED right there, right?
right there, yeah. Because it's the first FEG. Beautiful. But if I was taking this, I'm not using a stop loss, honestly. Because I wouldn't know where to put it. I wouldn't know where to put it.
Yeah.
I would just buy that with trust and the mental stuff.
We had the H4
And
dark
get your
pool.
20. Get your 20.
20? That's 50.
60.
Well, no.
Because
I
this
meant if you
third-
entered there, if you entered on the IOFED, without being able to place my stop loss at a reasonable level, I would just take my 20 and get out.
Okay, fair enough. If your entry is better than mine, you should have more than 50 points. Let me
68.
I'm gonna have to give up the guru crown. You know, I can't get in at the absolute lows like you guys.
It's your spreads that take you out from.
Yeah. I'll send my chart in the group now. I covered, but I didn't go break even. So now I'm break even, and I'll head over to the Discord. So that's mine. Peaceful.
Are you gonna do a new YouTube series called Daily 16?
Nah. Like I said, today I don't know. how to fully explain it, but today I was driving back home after taking my sister to school, and I just felt like somebody was, trying to reach out to me. So I said, you know what? I'm going to do a call today. Anybody who feels like their discipline is off, or yesterday kind of did a number on them, today is a day to just relax. And hopefully we get something nice. And we got something nice. Unless 60 points is not nice for you. I don't know. 60 points is nice for me. 60 points is very nice for me. So it is 9:42, which means, let me check this.
In 8 minutes, we should get an entry.
Easy.
Hey, 8. Where'd you get that number from?
I don't know. I don't know.
Maybe less, maybe 2 minutes. Who knows?
Dang, I'm off.
That retracement should not hurt anybody, because everybody should be partial there. So if it tagged you, break even. Because it tagged me, break even.
I didn't do what he wants to do.
Kish, will you use stops bigger than 20, 30 points?
It depends. So the correct answer is yes. But do I do that every single time? Then that's a solid no. Solid no. No.
Uh-huh.
Feels good. Feels good.
It feels good. Remember Belle Biv DeVoe?
So if anybody's wondering why, there's two reasons why I said this should retrace. Number one is it's hitting the range low of a failed expansion. So the idea that this is the range, just the idea, not a fact, but like an interpretation rather. This is the range. We expanded through the range low. We came back to the range low. Resistance broken becomes support. Ideas can, not must or will, but can print there. So whether there was no setup down here, or let's say there was a key level but no entry, at this point, I'd be entertaining a sell to buy. But I already had the key level, which I told you in advance was going to be either 925 expansion high, expansion on a big M5 candle, or 932 low. 932 low is right there. Hence, that buy. 20 points is standard, so 20 points below that low. That's my stop. So wait, if you practice trading like this, before candles print and have you thinking you need to do something, you will know what you want to do, and you will stock only confirmation. I mean, look, this has been falling nonstop. Some lucky fellow on social media is going to post their majestic short that retraced on them, and they didn't do anything. But we took this buy-in partial there. Like, have to be a guru level, at least entry level guru, in my opinion. Is 9:32 the start of a delivery? No, 9:32 is not the start of a delivery. 9:32 is the 2 minutes of allowed manipulation after exit is open. It happens for every news release. 2 minutes. The news release is 10 o'clock. What's the 10:02 candle? News release is 2 o'clock. What's the 2 o'clock? Yeah. That wick got you at break even. It must get you at break even. Is there a reason why you don't trade futures? Yeah, where I live, that's all. That's all, where I live. Mr. Johnson. Arise.
Hey Kish,
Hey,
kind of off topic a little bit. Is there any gems you can give on like the hourly rotation?
let me look who is speaking first. Who's that? Futures handle?
Futures handles, yes.
Um, Ah, tough to speak on hourly rotations, no. And I'll just say why bluntly. Everything since the Zoom model was to help you understand how some deliveries print. Full stop, right? Since the Zoom model, I've been trying to show you the rules around fractal, so to speak. Okay. Progressively, everything got you closer. The hourly rotations and then the 4-minute stuff, if you got that far, was the last time I pulled the veil back, so to speak, if I can use those terms loosely, to show how to trade time theory. After that, I cannot improve you without showing you 915. I cannot improve on the hourly rotations without showing you 915 theory. And 915 theory is not going to be on the menu, unfortunately. So,
Sorry.
yeah. No, go ahead. You're fine.
Like one of the things you say a lot that I find very interesting, but like yet don't know how to fully implement myself is like you say once you know like what you're looking for, you can come in and just stop confirmation. Can we talk about in this example where confirmation was coming from? Because like the confirmation over here on this opinion totally different than the confirmation that we use here.
Okay.
And like, even the like confirmation on this retrace, we close the FEG. Like, okay, we take like the lowest failure swings, but where's my confirmation that this is still bullish? That I lose that at times.
Okay. Which time frame do you want me to explain on, M1 or M5?
I mean, if I'm being honest, only M1.
Okay. Let's take off this, right? Let's take off the trade idea. Somebody probably took it again. I know. Big train coming.
Like in this one, and if I can just like butt in just to like kind of, I guess, say what my thoughts were. I had a key level here. Down candle into it. Like on your feed, of course, closed above. On my feed, we didn't. So I need to like buy below the open of this candle. And like my only confirmation here is the fact that this is an OB into the key level. And I'm just trusting that OB and the buy program that's showing up at it. Past that, there's no confirmation there.
Okay. All right. Allow me a second to merge this into this. Okay. Let's do this. All right. There's a. How do you hide drawings for the
Press Shift F or and then it should.
Shift F?
Yeah, are you on a Mac or yeah, and then on the left there, here, let me bring my annotate tool. It's right here. Click that and then that should be drawings. No, not the eye right there with the paintbrush on it. Yeah, exactly.
Okay, thank you.
You're welcome.
How would you trade this, David?
How would I trade this M5 chart?
Yeah.
For a buy?
Mechanically, without any type of, I don't want to hear anything about any entry fractals. If you had this much information, like tell me how to go find a trade in this without telling me about the entry fractal.
I would say if we're of around 50% of that.
I think your audio is cutting out, or it's me. Is it me?
I would say
Internet's been rough for the last few days.
Okay.
Range that we're trading back into.
Yeah, your audio's cutting out.
Damn. Okay. Never mind. No worries.
No worries, no worries. All right, okay. Let's do this. I'm just gonna scroll until the chart stops somewhere. Bam, stops. If I wanted to be a buyer in this day, how would I approach it from a process standpoint? I don't want you telling me that this is the entry fractal. It's a process. Anybody?
I would identify the expansion legs and identify the inefficiencies in those expansion legs and look to buy there.
Okay, I can vibe with that. Anybody else? How do you explain a process to somebody about how to buy this using this information?
Because using
Go
the
ahead.
bar recently, so I would say look for an expansion leg, wait for another expansion to close above it. In that expansion that closed above the previous one, mark the two effigies in it and
Not
seek.
to cut you, not to cut you, but you're doing the same thing. Somebody else. Explain to me or anybody how to go and find a setup in this.
Specifically in the consolidation up top?
Well, no, not here, but on this chart.
Yeah, so I would just say, well, wait till it gets to key levels. We have 3 of them, the top of the range, the midpoint, the bottom. And then I would look at those areas for an order block to form.
You're doing the same thing. You're doing the same thing.
Same thing? Okay.
Somebody else.
Is the range efficient or not? How do we react around those inefficiencies if there's inefficiencies? And then 50%.
That's a different angle, but you're also missing the most important part.
Find the last stop hunt leg, and then see how the delivery looks from there, and whether it has taken the previous high or not, and then look for inefficiencies, whether it has filled it or not, and whether we are in premium or discount portion.
That's a different angle.
Still missing it.
You're doing the same thing like everybody else.
What's the draw on liquidity?
Okay, if you speak English, Zane, can you explain a process?
Find the draw on liquidity first.
No, that's just a different angle. Or maybe Zane is shy. One sec, my mic is not. Okay. You can't explain a process to somebody. Like, you can't generalize using examples. And so far, everybody's just giving me examples. Narrative first.
What about looking at the
off this data? Oh, go ahead.
I said, what about looking at the bag, the breakaway gap at the expansion rate?
You're doing the same thing. You're doing the same thing. That's not a process, guys. You can't use examples to generalize.
At what point during the day are you trying to trade?
Okay, let's go. Let's start at that. Beautiful. Let's start with that. At what point in the day am I trying to trade? New York session.
New York. So now first I need to mark out 8 a.m.
Beautiful.
Yeah. There we go. Mark 4 a.m. as well, Kish.
Mark 4 a.m. as well. That's a process. I can follow those instructions. There we go. What else?
I'd be looking at where are we in the submission range and whether it's efficient or not.
Beautiful. So we have at 8 a.m. I look back and I find the 4 a.m. I'm assuming it's high and low. Okay. So bands at 8 a.m. I find that. Cool. I look at submission range for efficiency. Okay, let's do that. Bam, bam, bam. Between here and here is inefficient. So we have down candles there, down candles there. Inefficiency. Good. What's next in the process?
What time is it?
I see.
Wait, we already established the time is 8 o'clock.
Okay, perfect. Sorry, I was just getting back onto my other computer, but yeah, carry on, Kish.
I would personally mark out my M5 bags.
Where? The last extension bags?
In at least I personally would do ONS.
Okay, bam, 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 bam. This is the bag in ONS right here.
Yeah, and how did we trade that bag? Did we close through it?
Okay, so the bag was in lower part of ONS. The market trade, we close to it right there. Okay. Next part in your process, what's the next part? Am I bullish or bearish now that we've closed through it?
I am bearish.
Okay, so at this point in time, 8:15, I'm bearish.
Mm-hmm.
No, I need my drawn liquidity. I have my bias, right? I
Yeah.
got to the market at this point. I've done my analysis. I've got my bias. What am I doing next?
Look to the left. What's
Okay.
to the left that we could target?
ONS low. Inefficiency.
And we also have
Submission range EQ.
submission range EQ.
Okay, cool. What am I looking for after 8:15 now? It's 8:15. Yes, you can see the candles, but no cheating.
Yeah.
What am I looking for to go short?
So the way I've been looking is retracement FEGs and bags and seeing how we react at those levels.
Okay, cool. So I'm bearish at 8:15. I'm looking for retracement FEGs. So specifically the second FEGs in expansion. We started the expansion here. There's one FEG. There's a second FEG. So my mind is focused on this.
Yeah.
Cool. I got my retracement FEG. What do I want? So that's not my key level. I have my bias. I have my drawn liquidity. I have my key level. What's next?
Confirmation.
Confirmation. What entry fractal am I looking for? If one specific one, or what do I want at the key level to go short?
You want an OB or a rejection block?
OB or rejection block. Perfect. We come back to the right there. Wicks into it. We have body on the candle. We trade through here. So this is my order block.
Yep.
Okay. How do you trade in that? Frame the trade now.
I would be looking for any type of tap into that with a stop loss at this point at the top of the FEG.
Wait, what do you want to tap into, the FEG or the order block?
I would put my stop loss at the top of the FEG.
No, for
personally.
entry. So
Oh, for entry.
Are you selling the order block?
Oh yeah, I'm selling the order block.
Okay, so order block open price right there. Top of the FEG right there. Target is, we already took ONS load. Inefficiency is still open. There. That's a trade. 10 minutes tops.
Yeah.
That's a process, guys. That's a process. Not telling me that we're going to stock something. That's a process. Anybody can follow this process. Any market, we can follow this process. We find 8 o'clock. We look left. We incorporate. Maybe I should bring back overnight session. I don't need it. It was for your understanding, but maybe I will. Who knows? We find or draw on liquidity to the left, because that's essentially what this is telling me. At this point in time, where's my drawn liquidity? High, low, EQ, imbalances. But I don't have direction. I just have my drawn liquidity. If it opens in the middle like this, it could be any one of those. So how do I get my bias? FEG, expansion, we close through. I'm bearish. So I have my bias and my drawn liquidity, key level of an entry. This is an expansion through the bag. So retrace and I go. It retraces. Some persons could go here. But the entry fractal that we specifically discussed was rejection block or order block right there. Order block printed, short, done. Okay, so now let's go to today. Cool new trick. Thank you. So the question is now open to everybody. Explain a process for finding a trade here. If you can't repeat the process, it's not, It's not
Do
worth
you want someone
knowing.
different or same people?
No, go ahead.
It doesn't matter. It doesn't matter because
Yeah.
they're going to listen anyway.
Step 1, find 8 a.m. Right?
Step 1, find 8 a.m.
Oh.
Oh, the drawings come back. Okay, fine. Fine 8 a.m. Fine 4 a.m. overnight session.
What did we do?
What did we do? 8 a.m. we ran overnight session high, order block or rejection block. Rejection block.
Mm.
Okay. That's bias. Key level for entry. How am I framing entry?
OB.
OB. Up close candles, fail to expand, we trade through. We're looking for shorts inside here. If we miss that, what are we looking for? Retracement FEGs, since this is the expansion. FEG1, FEG2. You're looking to short here. So depending on your aggression, you could have missed this unless you just faded into that. Target, overnight session low, and submission range EQ. There we go. That's a process. But again, before coming to the charts, my bias was already done. I already had a bias.
So is there a way we can find a direction? Because looking at this looking at this bag here, somewhere here. Should we? I mean, this one up here, rather. Once we close above it, are we going to say that we are bullish?
Okay, that's fair. That's fair. So let's take a look at that. Let's say when we got here, we saw the last expansion and we're bullish. Where's your drawn liquidity? Overnight session high. Can't be overnight, it can't be submission range high because that's below us. Trade through here reasonably. You can't say you got an entry here. That's not a process. That's reacting to whatever the candles are doing. So your draw is here. Draw taken. The good book says, if your drawn liquidity is met, accept no new entries. So you're not buying retracements. You don't buy a retracement when the drawn liquidity is met. Even if you're going to trade continuation, you have to look for some narrative here. So if you remember at the start of the call, what we were going to buy was this candle going back above it. Now that makes sense. We're not buying a retracement. Why didn't we frame FG here? Why didn't we frame this FEG? Because the draw has been met. We took a high. Or even if you're not looking at this as the draw, this is the key level. We drew to the key level. What's the delivery like at the key level? Not bullish. That's it. It's not bullish. So you don't buy that. So you look for sells. I'm not bearish. So I'm not going to react to the candlesticks. Even though this is saying, don't buy. I'd rather sit patiently throughout all of this, reading it candle by candle, minute by minute, 5 minute by 5 minute, until I see what I want. Then I execute. Patience is not as hard as we think. Discipline is definitely not as hard as we think. I mean,
can we say we are bearish once we close below this bag? I mean, where is it? At the after the 5 minutes, was it 5 minutes?
5 minutes.
That bag that went to yeah, this bag here. Can we say became bearish here?
That's not a bag.
After we've gotten to the draw on liquidity, like this is the confirming direction.
That's not a bag.
Oh, sorry.
Is that not a bag?
Oh, sorry. I mean this bag. I mean this.
There we go.
Yeah.
That's a bag. Can we say we're bearish here? Sure.
Yeah.
But being bearish there means you have to frame your key level. You have to pull the bag out in time. Look at where we close, and then what do you want to see there for direction? Same thing. So that bag could potentially make this a breaker and all that. Could be a breaker short and everybody's happy. But no. I try to not be as reactive as this because I've been burnt before. Like, you know, when you just start coming up as a trader, you used to hear stuff about persons with groups, telling one person to buy and one person to sell, then posting the winner. I used to hear that a lot.
That's wild.
Yeah.
That's absolutely wild.
The old
It
days.
was, bro. Twitter is watered down compared to when the old folks or the mature folks were on Twitter. It was disgusting. Disgusting. Right? So I focused on not allowing myself to be that reactive. The candles should print in line with a process. Should. The process dictates what the candles look like, not the candles dictate the process. So think about if we knew, right? Just for bands. What if we knew that 8:30 to 9:30 was a manipulation window? It is not. Okay? It is not. But what if we said that and we knew that manipulation was taking place? Wouldn't we automatically be bullish since the manipulation is going counter to the direction of the order flow? So then manipulation is going to manipulate below lows. At this point in time, I want to see bullishness. No bullishness? Okay. Wait until it finishes. It's finished. Where's the draw? Before the manipulation. So above here. That's just an alternative version of how to look at this. So if the process says this is what we should be doing, the candlesticks print in line with the process. Manipulation is done. This, let's say this was the end, 9:30 was the end of the manipulation. It missed submission range by a fly's ... We got it here. Look for the draw. What did this candle do? Are there expansions down here? No, there's no failed expansion here. There's barely an expansion. On this time frame, at least. But if I have time and the delivery, can't I cycle through time frame and look for a failed expansion? Of course you can. And that's not me. That's not my model. That's not my process. But you can. Somebody can. And then, if this is the process that's printing, the candle should look like this. So, again, 925, based on that process, if we're bullish, 925 should be explosive. It wasn't. Okay. After 925, when is the next significant time the market's going to do something easy to read? 932. Equities open isn't easy to read. It's just volatile, and we know that. So 932. Remember when this was printing in real time? And I was saying we're gonna buy below the open of this. Too far away. You could buy this and then take a loss because what? You didn't follow sensible parameters. You have to be bullish here. Or, sorry, let me not say you have to be bullish. You should want to buy here. We should be allowed to trade, and I think those are my exact words. We should now be allowed to trade higher. We buy. M5 order block being validated. So remember the process. The good old, what's it called again? S. And if you don't know this acronym, then you're too young. If you do, kudos. It was yeah, that's it. Never seen this before?
Stop hunt, breaking market structure, RTO, return to origin.
That's it.
That's trauma.
Hey, Tish, on this buy down here, how do you because I have found myself getting a little bit sloppy in this regard, but when this candle pushes here after hitting our key level, how do you know, in this example, it was perfect, But
Low
how
of
do
the
you
week.
know not to buy right there?
What are you going to buy? What's your entry fractal?
The failed expansion getting in, like, because this candle technically opens here. So when you want to buy below that open, yeah, I get we came all the way down here, but in real time, I have no idea how deep that's going to go.
Fair, very, very fair. Let me ask you a question now. Where's that measurement thingy? Pull it over so you can see the numbers. That's 45 points. If you buy right at the open. Or
like,
wait, better yet, let me do this better yet. If you're going to buy this and put your stop at the exact low, you're looking at a stop of at least 50 points. Because if you put 48 here, then you're just crazy. So wouldn't it be better to allow for a deeper run? That's what I remember when I was drawing it on the chart. That's all I was doing. Instead of just telling you to put your stop here, I explain, put a 20-point stop there. Because if it retraces this deep in one candle, that's a 50-point candle. Yes, we love them, but they're not common. So if it runs this far inside a big candle like this, chances are it's not going to run 100 points in 1 minute. I don't think so. It's possible, right? But I don't think so.
Probability and risk.
Hey, Kish, can you, when you get a second, I'll ask you a question. Sorry.
Yeah, but David, this is like seeing the market run one side and then think it's like a Thursday low of the week type of thing.
No, I hear you. It's just like, and I made this mistake this morning, but like, if I'm just being open, as this opens, I mean, I give it maybe 5-6 seconds to drop down. I'm in here. I just give it a mechanical 20, get pulled here, and then
slow down. The response to your question is slow down. That's it.
Okay.
Trader 1 and trader 2. One person bought here with a 20-point stop, got stopped out, looking to sell a retracement. Trader 2 waited and bought here, took trader 1 stop. Market runs 200 points.
Yeah. Hey, Kish, can we just show something beautiful on the chart? Can you pull up an M5 and drag out the 9-10 bag? Okay. And then can you go on to M1? So 849 closes through the bag.
Right here?
Or excuse me, 949. My screen's a little different here. Hold on. Yeah.
All good.
Prince, in my eyes, the OB, expand up, come back down, test the OB, and buys within the bag. That was, and it's done that. I've gotten like 2 or 3 entries in that same area.
Yeah. I mean, this is nice, but this should be nicer. I haven't checked Discord, but I mean, I'm hoping to check Discord and see somebody bought here after that retracement. And this is specifically for David.
I got stopped here.
I got stopped twice here.
I got stopped here and I entered again here.
No worries. Because you remember purge and revert, David?
Yeah.
Which would again? You remember purge and revert? You remember purge and revert in the same day?
Purge and revert in the same day. You just need to wick this high.
No,
yeah.
Earlier before.
You'll see. Whenever you're journaling today or you're going over the charts, just remember that purge and revert in the same day.
Okay.
Just remember that, and you should see what I'm talking about.
And so can we okay, I get these entries. I was sloppy down here, like really sloppy. But then like once this happens, our key level is here. OB through it, early confirmation, CSD, more longs. Then when we push higher, there's no bag, but this is our order block. Then when we wick back down into that order block, there's our key level. You're buying that key level. Is that like a correct order of operations for you?
So this is the order of operation you should see. When we trade through this high right here, you should want to see support narrative get printed there.
And this is like kind of like goes back to our conversation yesterday, Kit, but like I see a bag here. And so like once I get confirmation of direction with the purge and revert, I'm staring at this bag.
No, that's what I was saying earlier. You're using examples to generalize. One example does not dictate how all the examples are going to print. That's what I was saying earlier. You understand the bag logic so much that you want to see it everywhere, and that's fine. But what's going to happen is you're going to miss clear and obvious setups because you're waiting for bags to be tested or traded. And that's not a knock on you because it's discipline, but you're going to feel that burn from missing moves. So if you're good with that, then yeah. So sometimes we'll be talking about stuff and I say, I don't care what prints at a level. When I have my direction, I'm going to take it. Because I know that there are many ways a bullish setup can print. We could expand, retrace the FEG and then it's gone. It could expand, print no FEG and then it's gone. It could expand multiple times, multiple FEGs, retrace to the second one and it goes. We could print lows inside a retracement FEG, wick them into a bag and then move. And every single one of those is a trade model. And you have to know that.
Yeah.
Instead of looking for one specific one. That's the difference between trading properly and trading based on rules and rules alone. Lovely market maker model, by the way. I don't know what else to say about that. And
the
intraday
purge and revert that you're getting to is here. Like
I know.
But you're still using a close. Is that correct?
No, I'm not using a close. It printed a close. The moment, all right, look at it, David. The moment this candle prints, you want a retracement.
Yep.
Whether it closed or not, you want a retracement. It retraced.
Okay.
You're overthinking it, but why did I close? I closed here again.
Just think dealing range, David.
Yeah, exactly. Dealing range is right there. But yeah, you guys are the lucky ones if you're holding all the way to the high. I should have. I just felt like I was having fun, and I closed. So 60 and 100. I can't be mad, right? I can't be mad.
You got in again.
Person reverting the same day. Of course, I'm again.
Why are you surprised?
Sorry for asking.
You have more than one entry?
Have a good one. Thank you, Tish.
Yeah, today was a good day. I don't remember. I think this was the H1 order block, the black level. I remember Instinct saying the color code them. I don't remember what they were. I think one was the order block. Yeah, the black one is the order block. So if they put a high here and retrace and take that high, you want to see them stay above that on M1. Right where this low is, right? If we put in a high like we just did and it retraces, you want to see them not 10-19 high. You want to see us close above that and stay above and just keep running. That's what you want to hear. Right there. But I think today was a very informative or informative morning. I think everybody got a good trade, unless you were stocking longs against this or you were selling against that push up. You should have a really good day. So with that said, feel like I fulfilled the purpose. Whatever called me to do a call this morning. Do enjoy the rest of your day. Don't go giving anything back. Be comfortable posting your chart. I'm gonna check the Discord now. And then I'm gonna go stretch a little bit. And if Tyler's still here,
Yeah, I'm here. Yeah.
you know what that
You're
means.
you're putting this one on YouTube, right? I had to leave equities open.
We'll see.
Yeah, I'll talk to you. Yeah.
All right, guys. Enjoy the rest of your day.
Thanks,
See you in the Discord.
Thanks, Chris.
Bless.
Mutual respect.
Lots of love, Leon. I mean, Ron.
Much
Thanks.
love.
Thank you very much, Chris.